welcome to this particular episode here at the Debate Circle. Today we are discussing matters digital lending, and I am joined on set by two individuals. I'll allow them to introduce themselves and then we can get right into it.
Okay, hi, my name is Efijana Atieno.
Okay, what is Efijana Atieno? Who is Efi?
I'm a lawyer and just someone interested in finances and economics globally.
All right, on my left.
Hey everyone, my name is Charles Kaunda. I'm an accountant and financial advisor, as well as an investor.
Great. So now, today's topic, like we have said, is matters financial and digital lending. So now, there's quite a bit here to be unpacked. But I think my first question is, to you who's watching, have you had run-ins with some of this Okash, Tala branch? Tell us about those very interesting run-ins that you have had, because they're nothing short of hilarious every time. So has anyone on this table today had a run-in with any of these digital lenders? Effie?
Yes.
I want to hear about it.
Personally, okay, I repaid the loan
But
to avoid harassment.
But
You know, someone I know was harassed and I kept receiving calls.
also you were part of the whole.
Yes. To the point that I had to block the numbers. So anytime a call would come with a similar number, it would always show as spam on my phone. And I knew not to pick the number because I knew what was up. And yeah, it was a little bit difficult because you don't know how to tell the person because they are ashamed that you know what's going on. But yeah, what can you do?
What can you do? Okay. Have you had a run-in with digital lenders?
Severally.
Wow.
Okay, well, one was personal, then the others were a few of my friends.
Tell me about the personal ones.
The personal one, well, the first time it's because we were going for a party with some friends. And
This is the problem
think-
with
I think-
digital lending. Right here, we have established the problem.
one thing led to the other and we had to Uber home. So my phone was the only one that had enough charge, unfortunately. So I did the thing, so to speak. Yeah, and my friends, I think, for the most part, it's mostly been on entertainment purposes, just trying to get...
That lays a very good context. Have you had a run-in, just like this too, with digital lenders? I have. No, that's a lie. So now, let us begin with the context around digital lending and how exactly we came to this place. So ideally, digital lending did not start in Africa. Digital lending, or basically fintech, started in the West. What is your understanding of the context around which digital lending was introduced and, or rather envisioned, especially in Western societies, before we carried the idea home to Africa?
Okay, the reality on the ground is that there, in the financial ecosystem, we have the haves and the have-nots, right? And as much as it is sad, there are certain people who do not even have access to bank accounts. And so this technology basically came in to bridge that gap within the financial ecosystem so that these people who are literally have-nots have a chance to access credit without necessarily going through the tedious processes in the bank and filling applications for a loan. Remember, some of them don't even have the bank accounts. So it was basically bringing credit closer to those who are not able to access it from banks. And as much as that was a good initiative at that point, it just started being misused.
And we'll get to that point. Your understanding of what exactly the circumstances around the introduction of fintech, especially digital lending, was in the West?
I'd have to say I agree with Effie on the matter, because it started when there was this huge divide between people who were financially stable. And you know, I'm going to deviate a bit and give an example in Kenya, because back in the day, for you to have a bank account, you needed a minimum balance of 20,000 Kenya shillings. That is still a lot in today's money, considering inflation. So when it started in the West, that was the whole idea. You know, most people couldn't really receive credit facilities from financial institutions. So fintech came along and here we are.
So ideally, one of the first mobile lending apps was Tala. Tala started in the West and then was introduced in Africa, Kenya specifically. Now this happened around the year 2012. We have now gone into the venture of M-Pesa, and you're able to access money on your phone, you're able to send and transact and whatnot. And it opened up a lot of possibilities in terms of financial inclusion. But then again, we now started seeing the rise of fintech, because they were the first people to introduce M-Pesa in collaboration with them. the name?
M-Shwari.
M-Shwari, exactly. So now, what are the circumstances around now its introduction in Kenya when you're talking about the unbanked and what exactly the initiative was? There have been questions around whether or not the introduction was altruistic, and I'd like to hear what your opinion is on the same.
Well, when M-Pesa came through and now it connected so many people, millions, literally millions of people, suddenly were able to send and receive funds, you know. So with that new development, we had to come up, well, M-Pesa created now, the company, Safaricom, created now the M-Shwari platform for people to receive loans. Because ideally you want people to send money, of course, but then again, you want people to also have access to funds that naturally they wouldn't have. So M-Shwari came about, and I believe it's in partnership with NCBA. So the idea was now to bridge the divide now within the country.
Okay, so ideally the idea was so that we could introduce a lot of people who were previously unbanked, of course coming from the regimes of having people who had bank accounts in government banks. So ideally, that is the altruistic intention. But then my question here is, understandably so, we want to introduce people to M-Pesa and whatnot, and rather digital services. But then my question is, when you take into account, because you see, the thing about it is, it's not like your traditional bank. You do not walk in, fill forms, and bring your tax returns. You're ideally looking at other types of data outside of our normal traditional data. So how many people have access to some of this data, such that we're going to argue that financial apps came to, or rather digital lending apps, including M-Shwari, came to help the unbanked?
Okay. I'll answer that in twofold. First, Kenya in 2012 to 2014, Kenya was at that point where, you know, everyone is referring to us as the Silicon Savannah of East Africa.
Yes.
And we have to live up to the hype. So we are in this space where we have to promote innovation. And one of the areas that was highly, that innovation was rampant was the financial sector. So we have to promote innovation. At the same time, it has to come under the guise of, okay, we are helping people, because look at it this way. Just like you said, you don't have to go to the bank and fill forms and fill so many applications and wait for several days for your loan to be approved, right? So one, it's convenient. You can do it at the comfort of your home. And then at the same time, a lot of people are buying smartphones. So this provides a good environment for this technology to be introduced in the country. So I think it's that environment and just a surrounding that was very homely and comfortable for this technology to come into the country that made it possible for apps like Tala to come in and several others. Now we have about 49 of them.
120 actually.
Wow. 120.
Currently we have 120 digital lending apps in this country.
Awesome. So you can imagine.
Yeah.
And if you just look at that, it clearly tells you that there was a point where they saw a need.
Yes.
And the need was a lot of people wanted credits, they couldn't access it, so let's bring it closer to them.
So ideally, we're talking about a lot of people want credit, so we want to open up avenues of money lending, especially. Of course, we understand the need of having credit, affording people the ability to borrow money and repay it at their convenience. But then the question is, all this is gearing towards one thing, which was termed as financial inclusion. And what is our understanding of financial inclusion? When you talk about financial inclusion, especially as regards debt, what is our collective understanding of financial inclusion? Because it's very easy for us to allow for some of the things that digital lending apps do under the guise of financial inclusion. What is your understanding of financial inclusion?
So in my context, financial inclusion is where many people, ideally everyone, is in a situation where they'd be able to access funds. So be it from banks, cooperative societies, all the way to digital banks. So the idea is we have equitable opportunities to access funds. And that was the flagship that now...
But I think this is the question that arises. If the idea is for everyone to be able to access funds, are there no caveats when it comes to the access of funds? Are we looking at it as just, let us make available credit? Or are we thinking along the lines of, it has to be useful, it has to be affordable, it has to be sustainable, it has to be delivered in a convenient way? Did we look at financial inclusion from the inception as that, or did we interpret it as, everybody now has money, yes. So if you want 1,000 bob, here it is, take it and go.
Maybe in a utopian setting, I would agree with you.
Okay.
But in a realistic manner, you see, at the end of the day, it's a business. So as long as there's demand for a service or a good, I'm going to want to make money out of it, you see. So I'm not saying that the intentions may have been a bit under the water, but it definitely it provides a platform, the perfect platform. You know, your users really don't know too much. You can put contracts in there that they really won't understand.
Yeah.
It's a perfect guise for, you know, unscrupulous activities.
Okay.
Yeah.
Yourself?
Let me be the devil.
Play the devil's advocate,
yes.
by all means.
At that point, you know, there's something in law we call the mischief rule. When you're making a law, it's to solve a certain mischief, a certain problem at that time that is foreseeable. What was the foreseeable problem at that time? Giving people access to credit. They solved that. That's it.
But then now the question then becomes, how are we giving people access to credit before? Yes? And how are we giving them access to credit now? The guys who sat down and decided, you do not just walk into a bank and say, well, I need 10,000 bob. I'm not going to tell you what it is for, and I will not tell you how I'm going to pay it back. Just give me 10,000 bob. When they put some of those limitations in place, then don't we think that when it comes to the access of credit, when it comes to digital lenders, then we should see the same type of energy being put forward?
Okay, you know one thing, there was an influx of this financial technology when the interest rate cap was introduced to banks, right? So banks decided to become more strict in their lending. And because they decided to become more strict in their lending, someone saw a loophole. Okay, let me give these people money. But for me to know that they can pay, well, let me get their data. You know,
all right.
That's the biggest asset.
That's the biggest asset, the data element. So now, currently, there are 120 unregulated apps where you can borrow money, whether on USSD or on Google Play or basically any other app store that you might need. Are you concerned about the number of digital apps that are currently existing? Let us begin there.
Yes.
You are concerned.
Yeah.
Yourself?
Concerned, I would say intrigued.
Intrigued. Let's start with concerned and then we'll go to intrigued.
Okay. I would say I'm concerned because there's a trend that has been going on, and we've seen from the initial apps that were there, you know, Tala, Branch, people are not paying back their loans. But for some reason, instead of them withdrawing, we have more people. As of 2019, there were 49. Now you're saying there are 120. So
I like that.
All of these people saw that Kenyans and almost 500,000 Kenyans are on CRB. They can't pay loans. But then, over 50 more apps just launched their companies in Kenya and work. You know,
wow, that's a loss-making business. I
know,
like that.
So there has to be something that we don't know, or something that they are conveniently not telling us, so that they can continue with their business.
Yourself?
Yeah, actually,
you feel the same way?
That is exactly why I find it intriguing, because the market already saturated.
Yes.
Some would say, yeah. But then again, we are now we're coming into the age where fintech is now riding quite high, and it's not just in Kenya but the whole world, you know. So from my end, I find it intriguing because one, I wouldn't say that they are 100% bad, the lending facilities, because at least 60% of the people who do receive credit facilities from them end up using them for business purposes. You know, they use it for working capital. We have, of course, a number.
Arguable.
Yeah, we have a number that use it for entertainment purposes. But then,
I mean, your cab expenses can tell you.
Yeah, that's a testament to it. But them coming into the country and facilitating all this, I think to a large extent it's a good thing.
It's a good thing.
Yes, to a large extent. I know that there's a lot of gray areas, and most of that is to do with the fact that our Banking Act, you know, our CBK Act, they really haven't covered. They're fallen quite behind. And I think that's why with the new bill that Parliament seeks to approve, if they haven't yet already.
They haven't yet?
No, they have.
No, they have. We're waiting on the National Assembly.
Yes,
right?
they're waiting, yes.
Yeah, so once that's done, I'm sure we'll be able to reap the full
That is also very arguable. If you're just joining us, we are currently discussing digital lending apps and the digital lending marketplace in this country, its pros and cons. And the question that I posed at the beginning of this conversation is, what run-ins have you had with M-Pesa, with M-Shwari? Which ones have you had with Okash? Tell us about Branch. Tell us about all these lending apps you have borrowed from and how they have harassed you and your village people. So now,
I actually wish that Fuliza was a lending app so that more people could talk about it.
And Fuliza too. And Fuliza, you have Fuliza to pay for cabs like Nani over here. Tell us about your experience with Fuliza. Now, the issues around digital lending, of course, did not start at the inception. Back in 2015, when Tala entered the Kenyan market, of course, you do not see some of these issues coming up. Interestingly enough, even at the point when Tala was entering the Kenyan market, there had been complaints back in the US around how Tala was going to go about enforcing debt collection. So now, let us go into some of the unethical issues that have come with what we now call predatory lending, which is the phase we are in now of digital lending. Violation of all ethical, moral, and ideally legal protocols. Yes, when we're talking about that, we're looking at harassment. What is your take on exactly how debt collectors tend to enforce their debt collection methods in Kenya?
Again, let me play the devil's advocate. Let's not vilify them too much, because banks repossess your houses and your cars if you fail to pay the loan.
Okay.
So what they're doing essentially is, how do I put it? It's not as aggressive as what banks do. But no one is willing to have that conversation.
We are, which is exactly why you're here. If we were to argue on the element of it's not as aggressive as what banks do, again, we now bring the question of what is the emotional and the mental effects that we are overlooking whenever it comes to especially digital lending. When you talk about harassment, we are ideally looking at extreme cases. If you go on, this was ideally covered in one of the TV stations, and some of the issues that we felt there were people who were being fired because, of course, third-party information. You're reaching out to your employer, someone is harassing your employer, and that's how you get laid off. That should not happen in an ideal workplace, but this is not an ideal space. So when we say that, yes, it is not as aggressive, what does that mean for someone who lost their job, for someone who was shamed beyond seeing, for people who committed suicide, which has now become a rampant incident whenever we're looking at debt recollection?
I think the thing is, they have also now realized Kenyans are, we just take loans. You do not know how you're going to repay that loan, but you still go ahead and take that loan. So when it comes to the burden of paying the loan, it becomes difficult because maybe you had not thought it through. You do not have a way to pay it. At the end of the day, one thing we have to acknowledge is that this is not our money. This is not public money. This is someone's private funds, and at the end of the day, they have to get their money back and they have to make profit from the same.
Okay.
So the moment they put in their money for you to be lent that money, you should just be a decent human being and put it back. But when it comes to harassing people, I feel like a contract, the moment you agree to those terms and conditions, the contract is between you and the lender. So them introducing third parties who are not privy to the contract, that is where I have a problem,
Okay, and we'll get to that. We'll get to the element of data privacy. How do you feel like the methods that are being used by data collectors in this debt collectors rather in this country are ideally what should happen? She argues that it is their money, they need it back. You have said, now me, I am not paying, take me to the village. What happens? Do you feel like the methods they're using are good? And if not, what are your alternative suggestions of debt collection?
I absolutely do not agree with the collection methods that they have. From my stance, I think it all stems from how they run the organization themselves. For example, Tala branch and all them. So what they do is they look at your willingness to pay, but not your ability.
Yes.
And those are two completely different things, The data that they see from our phones, I think they check your M-Pesa statements, they'll check your M-Pesa transactions, see who you're calling, who are the people you're engaging with. And if you, for example, don't bet, for example, you're deemed as a very good client that you are willing to pay. However, if you have, you have a betting sort of habit.
Maybe have health conditions, things that they would not have access to.
Precisely, yes. Then they wouldn't, they wouldn't see such things, and that's where the problem comes about, which leads them now to having all these unscrupulous ways of receiving their money.
Debt collection.
Yeah.
So ideally, we could refine the ways that they use to get data in terms of who they lend money to. There's an element of debt stress. When you talk about getting debt, it's not as easy as now I have gone to the bank or I have gone to a digital lender and I've gotten 3,000 shillings. As we're discussing the willingness and the ability to pay, those two different things, of course it narrows down more to the ability as opposed to the willingness, because good intentions are So ideally the question then becomes, when we're looking at the element of debt stress, ideally are there people who are having to miss out on buying meals and paying for medication such that they can pay debts? And if that is the case, then are we still thinking positively about digital lending, especially in the way that it is continuing to manifest in this country?
Sadly, that's the reality. You know, when they came in, they were thinking of a utopian society where everyone has access to money, everyone can be able to get credit. But now we find that a lot of people are struggling financially. That's the reality. The economy is, everyone is hit, you know. So you're in this position, you can easily get this money. So the best you can do, people are just, you know, it's like a debt cycle. You borrow from Tala so that you can repay Okash, they stop harassing you and your family members. And then you borrow from Okash again when your limit increases so that you can repay back Mshwari. Borrow from KCB M-Pesa so that you can repay.
Borrowing Peter to pay Paul.
Exactly. So it becomes a vicious cycle. And you find that at this point, you're really not able to do something much with the money, as much as, yes, just like you said, there are some people who use it for business. You know, I'm a mama in Gikomba, I can go get the money in the morning, go to Gikomba and get my clothes, go sell or get my vitungus and nyanyas. By evening, I have the money, I can pay it back. But then, the moment you start getting used to it, you become so addicted that you cannot really keep tabs on how much goes into your pocket and how much goes back to repaying the loan. Because if you borrow 100 bob, you do not return 100 bob.
Yeah.
You return it with some interest.
Yes.
So at the end of the day, you make losses from that. But the thing that is mostly in our heads when you're taking the loan is, I need quick money, I have quick money. That M-Pesa message is always so exciting. So it just creates that. Exactly. Who doesn't like seeing that message? It just makes you happy.
But then now there's a question, and I like some of the issues that you've mentioned, the idea of borrowing Peter to pay Paul, and the idea that some of these things have happened before. In 2017, we went through a period where there was quite a bit of cash crunch. A lot of people felt as if the economy then could have done better. And this was the time around which a lot of these digital lending apps were coming into play. And so the question then becomes, are we looking at situations where algorithms are not being revised such that they continue to reflect the state of the economy? In 2020, COVID has hit. 2021, we're still battling with the effects of COVID, and we shall continue to battle them for a long period of time, yeah? So the question is, if we did not learn, or we're not seeing a situation where we feel like digital lenders learned from 2017, are we anticipating the same scenario today, and what then becomes the effect of not revising that algorithm to accommodate the different periods in the economy?
I think most of the digital lenders are looking at each other. And as you've mentioned, they're now 120,
yes.
You see. So from their view, it's, my friend here is making profits.
Yes.
Of course, otherwise he wouldn't be in the business. So if I was to revise my algorithm, it would mean I'd have to spend money on R&D.
Yes.
I would have to spend money on tech innovation. And that will set me back compared to my competitors, you know. So at the end of the day, it is easier for me to stick to this model. This business model has been working, let's stick to it. We could refine it somewhere else first, you know. Already in Africa, especially in Kenya, it's just now taking root. So let's revise it somewhere else, see if it works there, then we can implement it here. But them changing it right now, it may not work in their favor, at least from my point of view.
But what does that mean for the goal? Let's go back to the intentions of digital lending from the beginning. That back in the day, in your 1980s, 1990s, going all the way to 2000s, we are seeing people who can only bank if they're part of civil institutions. And then, of course, from 20,000, still there's a limitation in the guys who can bank. Then someone comes around and says, here's an app that is supposed to ensure that we achieve some level of financial inclusion, which is, of course, one of the biggest things for any country. So what does all this mean for financial inclusion? So every time we're discussing this, what does this mean for your mamambogo on the ground?
That's a very, very good question, yes.
Okay. I think the problem comes in when the desire or the goal is to have financial inclusion without financial literacy.
Yes.
Because you do not give someone who doesn't know how to handle big money access to big money. You've already created a problem in itself. So, and I just saw recently, these mobile lending apps are coming up. They have an organization.
DLAC, Digital Lenders Association of Kenya. Yes.
And one of their goal is to ensure financial literacy, especially for their lenders. But the question or the problem I have with that is, the moment they want us to be financially literate, especially when it comes to that tech space, they'll have to reveal a lot, which I don't think they're willing to, because that's where they make the money, you know. And I don't think, just like you said, they're not willing to restructure their business models because, one, they have seen it work for the other person, so they think it would work for them. That is the perception they have. And the moment it doesn't work for them, that is when they resort to, you know, harassment and all these models to be able to get back their money. And I would say it's not, okay, you know, the people they employ, I just saw some ads recently on LinkedIn, by the way, you'll see a lot of them. They're looking for, I don't know, communication.
Aggressive data collectors.
Yes, aggressive data collectors. You know, those people who will put morals aside and will put Jesus aside and will just call you and call your pastor and demand for their money, you know. So they're also coming, now they've discovered this problem, which is people not paying, and they're coming with a new loophole. We're giving people jobs, you know, these debt collectors. So I think they'll just go round and round until they all fizzle out.
Financial literacy is one of the most crucial elements of digital lending, or basically lending for anyone, yeah? It's not even just digital lending, even your typical mortar and brick lenders. So the question is, when you're looking at a larger part of people borrowing for entertainment, when you're saying at least 57% of the people who borrow money are not your typical businessman who wants to finance operating costs on a daily basis, it's not your typical person who wants to finance probably a medical cost. A lot of times it's entertainment, yeah? And we're looking at a country where a lot of people who borrow money go into gambling and debts, yeah? So what does that mean in terms of financial literacy? Are we looking at a place where we did not prepare the ground for digital lending? And if so, when you talk about digital lenders, you've talked about how DLAC wants to introduce financial literacy, yeah? Who will be in charge of financial literacy? When we talk about it, it's a very far-fetched concept. Yes, you will tell people how to use money. Who is in charge of that? Are we teaching it in schools? Are we teaching it in universities? Are we going around in campaigns? How does that play out? Charles?
Yeah, well, I'd first of all start by saying that most of our educational institutions, especially, haven't done the best job when it comes to financial literacy. You know, most of these concepts, I think, personally, myself, I learned a lot about how money works after campus, you know. So the problem for financial literacy is at a very young age. And then now, the bigger population demographic that's using digital, that are getting digital loans, tend to be below 35. So you can imagine most of these people already have families at some point, knowing our, you know, our values. Guys have families.